Hey guys, Krisha here. Please be cautious of any fake comments and emails you may receive from people pretending to be Mango Research. Sean and I will never, ever contact you for investment opportunities or anything of that sort. To get in touch with the real Mango team, make sure to join our official Discord chat using the link in the description below. Stay safe out there, and remember, do it Mango. And what's up, you guys? Welcome to the Mango Grove. My name is Krisha, and this is today's Cardano analysis video. I have Sean with me today. Sean, say hi.
Good morning, everyone.
Now, as many of you know, at least I hope you guys know, we did close, or rather open, a brand new weekly candle today. Okay, so this is a very exciting candle. This candle gives us more information on the chart for Cardano. And, well, before we really cut to the chase, Sean, I want to go ahead, so I want to get on over to that Mango dashboard, and I want to see what the dashboard is telling us on there. Okay, let's go and take a look at it. So I'm currently on the weekly time frame on the Mango dashboard. I'm going to go ahead and filter out Cardano. Okay, I feel like this is important, okay, just to drive the point through here. Okay, Cardano USDT on the weekly time frame is still long. All right, now this is giving us an overarching view of what that macro trend is telling us, Sean, and the trend is still good. Okay, it's still long on here. This long trend change actually came in 119 days ago. Okay, now for those of you Cardano fanboys and fangirls who've been in this trade now for, well, months, you guys are still up a good 700% if you manage to catch it based on the Mango dashboard. Okay, 700%, Sean, let that sink in. Cardano BTC, okay, is also long still. This one came in 48 days ago. And if you took a trade based on this, you are still up 66%.
Jeez.
You know, and this is telling about that macro trend, that I don't think that this trend has changed. Even when I look at the current, let's say the current structure of the chart, I don't think that trend is bearish still. What are your thoughts on this?
Well, it's something that we try to reiterate and reinforce almost every single video, every single stream, every week that we come on here, right? We say that, hey, the bull trend is what matters, and the bull trend is dictated by the macro trend, and you may go into consolidations or even downtrends on the lower time frames. But if you have high conviction in your trade for the long term, like many of the Cardano fans out here do have high conviction, right? You cannot let those lower time frame consolidations shake you out of your trade. Now, if you are trading the lower time frames, you are trading the mid time frames, that's an entirely different story. So for a quick example, Bitcoin is my high conviction trade that we've been building a position, Krisha, since freaking like hardcore, right? Since $7,000, 10,000, we got even more aggressive and got more and more aggressive. Our plan was always to add, regardless of the downtrends or the lower time frames, as long as our higher time frames were in an uptrend, and that was determined by the weekly, the monthly, the 4-day, etc. And that has given us a massive freaking win since freaking like the 9,000, 8,000 levels. So guys, you cannot let the lower time frames, one, shake you out of your trade and get scared, and two, do not let the lower time frames impatience you out of your trade. Right now, there are two ways people lose out on the big wins: either by getting emotional and selling because they're scared, or two, because they run out of patience and they start chasing other coins, right? How many times have you guys done that? You guys are, oh, this coin is pumping, let me go and put my money in there. And then when you put your money in there, that coin dumps, and the coin that you were supposed to be in actually starts moving. And it's just a never-ending circus of your emotions getting the better of you.
Well said, a never-ending circus. Love it. And look at Cardano's chart right now, Sean. Like, it's still looking good. Okay, yes, we did not see that that follow through, right? People are so used to these volatile moves in favor of their trade that when the consolidations come on the macro time frame, and even this consolidation, it's not like for the volatility on this chart, this consolidation, the range, this was a good 25% compared to the volatility that we saw from the last breakout, okay, to the tops here, which was a good 227%.
Yeah.
Okay, so these are not these are healthy consolidations essentially. Okay, now as far as this weekly close is concerned, okay, now this was the last week, March 15th. I think, now what I was looking for, now for those of you who have been catching my Cardano analysis videos, you guys know that I've been looking at $1.15 as that major region. And just look at where we closed there. Okay, we closed over $1.15. And even if I just zoom into this current weekly price action, okay, and I look at this today's candle, okay, the way we started this week, Sean, we actually made our way all the way down to that region, that test of that $1.15, and we're currently bouncing off of it. Okay, I think this is healthy price action. What this is sort of telling me right now is that perhaps Cardano wants to get into a prolonged sort of consolidation here. What are your thoughts on this?
Well, we didn't get the weekly close that we were looking for last week, right? So what's Cardano telling us? What's Cardano telling us? It's telling us, hey, you gotta be patient. That's all, right? I don't like to time things because you never really know. All it takes is one big buyer to come in or one big seller to come in, by the way, and change the complete story around, right? So trying to time it based on what the charts are telling you is if you want to time things, it's better to be looking at your options chain. All right, guys. Just simply looking at the charts is not the best way to do it. But we can decipher whether we should be getting impatient or patient, right? And right now is not the time to be getting impatient with your trade, especially if you are sitting in from a longer term position, right? It's just saying, hey, be patient. We have not lost the uptrend yet. This may take some time or it may erupt this week. We just don't know. What we can look for is if this, then that. If we close above that $1.31 region on the weekly time frame, Kusha, I'm looking towards $2. I'm looking towards $5 even, because this chart is explosive once we get that.
Yes, I agree. And right now, the way this, the current price structure of this chart, okay, on the weekly time frame, guys, it's giving me a bit of a hint on a squeeze, okay? It's a very, I'm going to say this, it's a very broad squeeze, if anything. But what I'm looking at here is at the week of 22nd of Feb, okay, where we actually put in that wick high there that came in at $1.48. So that was the first high that we put in. Now, last week, we put in a lower high that came in at $1.47, okay, very close there. And now if you look at the bottom wicks of this, we have one low that was put in on March 8th, okay, but then we had a higher low that was put in, well, last week, March 15th, right? So it's telling me that, hey, you know what, this is a squeeze consolidation. Yes, it could break in either direction, but look at the macro trend right now. The macro trend is bullish. It's telling me that this has a higher probability of breaking to the upside, breaking to the side of the overarching trend.
Yeah.
Right.
It's as simple as that, right? Just again zooming out into the weekly and looking at the higher low of March 8th, March 15th, the week of March 8th, March 15th, which is coming around $1. And the last higher low prior to that, Kusha, was all the way at 30 cents.
Yeah.
So think about that. 30 cents to a freaking dollar, right? That's more than a 3x from one high low to another high low. And yes, you're going to have to endure some volatility, guys, towards the downside. Very, very little, to be honest with you guys. Like, you guys have to face very little compared to what you're getting towards the upside. If you manage to catch this as a higher low, just think about it. If you manage to catch this as a higher low and it gives you the same impulsive move like that you got off when we moved from 28 cents to $1, right? That essentially gives you a move from $1 to $3, guys. More than that, $1 to perhaps $4 to $5. If this is the higher low before the next impulsive move.
Yeah.
I hope that makes sense. I know it's a little bit abstract, but essentially what I'm trying to say is that if we get an impulsive move over here, your trade-off is asymmetric.
Yeah. Boom. Well said. Well put. And I think that's very important for people to understand that. Now, of course, because Sean and I were leaning towards the side of the overarching trend, which is the bullish side, right? There is that probability that says that, hey, you know what, this could have, this has a chance of coming down as well. The one price point that I'll be looking at to anticipate any further continuation to the downside, at the very least on the weekly time frame, is if we start taking out this wick low right here. And Sean, I'm looking at the candle of March 8th. Okay, now that wick low came in at 98 cents.
Okay.
Okay, if we start taking that out to the downside, then I believe that we're likely going to come and at the very least test 78 cents.
Yeah, makes sense.
Right? And also, Sean, the Mango Dynamic, if you switch it on, now we have been playing the Mango Dynamic really, really aggressively. Right? It's been keeping our trades super simple, super mango. We're just catching that trend on it, right? Every time it turns green, we're looking at the op line to actually put in our bids. And so far, if you look at the dynamic on the weekly, dude, it's green. Yep. It's green. It's looking good. Yeah, I feel like the probability of this one is still leaning to the upside.
Yeah, I completely agree. The thing about the dynamic actually is kind of indicating what you mentioned in the beginning of the video, that we may either see a prolonged consolidation, or two, what I said, we break out towards the upside. I really don't see us coming down below 98 cents, Krisha. What I do see happening as a downside move, and this would line up with what you talked about in terms of consolidation, is us test $1 again. All right, that's like worst case scenario, where we come down from around, I think we're sitting around $1.20 right now. Yeah, $1.19. Come down now 20 cents, test that level, get supported, and leading into next week, right? We just support that dollar level, and then leading to next week, the Mango Dynamic comes up above that level that you mentioned at 98 cents, right? The Mango upline lives above that level, and then we get the ultimate buy opportunity over there, right? Around 98 cents on the weekly level, and then you have an easy trade. Why is it an ultimate buy opportunity, guys? Not because, oh, I'm going to make a lot of money, because it's easy to get out of your trade if you know you're wrong. Because then if you get that weekly close underneath the dynamic, it's lining up with your trend analysis as well. And you get to get out very, very with a stress-free mindset. Hey, this trend is broken. It's lost the dynamic. It's lost the higher low that Krisha and Sean are talking about. I'm just going to wait out and see how this plays out. I want to see the trend develop again before I get back into this. Right?
Yeah,
that's it.
And I also have like a really, really cool let's say almost like a fractal, I guess we could call it, that's marked out. And I'm looking at the week of 14th of December, that entire little consolidation that we had that went on for 1, 2, 3, 4, 5 weeks until we had the break of 16 cents. Okay, now if you have to look at that against the Mango Dynamic, I feel like we're doing something very, very similar in this region right here. That dynamic is not turning neutral. Okay, we're seeing it creep up to price as opposed to the other way around. All right, because if price was going down lower, we would have seen this turn neutral by now. We're seeing it creep up to price, and this may end up in a squeeze situation in this consolidation until we actually see the break that we saw right here.
All right. Since you mentioned that, I'm going to go ahead and ask you to turn on the 3-day time frame, or even the 4-day. But look at the 3-day time frame on the dynamic, especially for those people who are watching who don't like waiting for the weeklies. The 3-day might be a little bit more tolerable for you guys, while still keeping you in the trend. You'll see, Krisha, the fractal zone that you mentioned is exactly the same zone I was watching on the 3-day time frame, though.
Whoa.
You'll see how perfect it literally drew in the ascending triangle. I have my entire chart drawn out based on that, actually. And you'll see that the 3-day has been getting it really, really nicely. So currently, right, you could look at this as a if this, then that. If we break that horizontal on the 3-day above like $1.34, right, and then take out those two wicks sticking out like antennas at $1.48, oh man, that's going to have the same impulsive move that we got from 16 cents leading into the 38 cents, and then after that probably another consolidation on the mid time frames leading to probably another impulsive move, perhaps $5.
Ooh.
Yeah.
But yeah, this is actually looking really good. I'm kind of excited now. Okay, so 3-day, I'll be keeping my eyes out on how the 3-day closes relative to $1.31. I think even a candle body close, like we saw in that last consolidation where we actually closed over that resistance, right? That I believe came in at 17 cents. We could be seeing something very, very similar play out here as well. So this looks good. This looks very good so far. I think this still has a chance of, well, the bulls taking over. Now let's get on over to perhaps the 4-hour time frame, Sean, to see what we're doing leading up to the rest of the day.
I don't know. I don't think we should, but you could go ahead and take a look at it.
You want to keep it macro, then we can just keep it macro. Is there any other time frame that you're looking at?
so I don't think anybody should be looking at any time frames underneath the daily, right? So keep it daily and above. So people are going to have this tendency to check the charts every single freaking hour of the day, and you don't want to be doing that, guys. Especially if you guys are looking for the big wins. It baffles me that you want to be looking at the 1 hour time frame, but at the same time you want to get the huge wins. It doesn't work that way. It just doesn't work that way. There are two ways to get big wins. All right, you put on a massive, super massive position size on the lower time frames, and you get in, get out quick. Where in which case, even a move from $1 to like $1.15 would be massive, right? A 15% move would be massive for you because your position size is huge, and you don't care what happens after that, right? Or you play the trend, and you can still have a mid to big position size, but you have to be okay with the drawdowns, right? And you play the trend, and don't let the lower time frame moves scare you out of your position, and then you catch the move all the way from 24 cents, 32 cents, all the way to $1.32, $1.48, right? Those kind of moves are what I like to play for, because those kind of moves, guys, give you freaking 6 months to 1 year worth of freaking income within one trade, right? I just feel so wow, stress-free.
But yeah, I believe that if we start taking out that $1.31, I'm really liking this 3-day chart, Sean, by the way. Good catch on this. $1.31, if I'm looking for a candle body close over that, then I think the next major region for Cardano is still $1.68. $1.68. Okay, after $1.68, $2, here we come. Now, you said you wanted to check out the daily time frame, was it?
No, well, yeah, you could just go ahead and take a quick look at it, but it's literally telling you that, hey, we are sitting in a consolidation range right now. The trend is still intact. Yes, we are squeezing, Kusha, just like you mentioned. We're putting in those higher lows. We put in one on 82 cents on the daily, then we put in another one around $1-ish, right? And at the same time, yes, you could look at those as a high and a lower high at the 28th of Feb, where we put in $1.49, but I'm looking that as more of a double top. And if Cardano, this is how I'm looking at it, guys, and you can keep it this simple. If we lose 95 cents, all right, if we lose 95 cents, it's underlined by the dynamic too. For those of you guys who have access to it, close a daily candle. You want to see a daily candle close underneath there, then that is going to look like a ugly double top that may see continuation towards the downside, and things may start looking ugly for Cardano, in which case the best high probability trade is to just sit out and watch what happens, right? Because if we see a fake out where it breaks back into the range, great, that's super bullish. Okay, that's the bearish side of things if we break 95 cents. However, if we close daily candles above $1.47, $1.45, $1.47-ish range, and we take out those wick highs, that double top wick high, well, in that case, you can start looking at this as a double top that morphed into a potential ascending triangle, and now seeing continuation towards the top side, right? So it's if this, then that here, okay? So far, I'll leave you guys with just one tip. The markets have been rewarding people who have been playing the consolidation high lows, right? So if you guys play it that way in the long term across coins, right, you will come out on top.
Yeah. So just to give people a visual on what Sean just mentioned, like he also mentioned in the beginning of this video, it's always going to be an if this then that. If we actually start taking out this 98 cent region, which is also marked by the by that dynamic, okay. In addition to that, I do have a level marked at $1, and if you're looking at that double top playing out, Sean, I'm looking at that dollar as the neckline of sorts. Yes, now, for those of you who do not see the double top, I've marked it out right here. This is one top right here. This is the next top. It's almost like an N. All right. Now this dollar region, okay, marking the wicks of that, is the neckline. Okay, Sean's like breaking that neckline would have bearish implications for Cardano. But I believe, Sean, you are going to be looking at the range, right? You're going to be looking at $1 going all the way down to that 98 cent region marked by the Mango Dynamic.
So, Kusha, I'm not sure whether you have the new version of the Mango Dynamic activated. I do. Okay, so the top of the cloud is marking the $1 region.
Yes, correct.
So yeah, if you do lose that, that'd be the first big warning sign. If you're a little bit more cautious, or if you're just getting into your trade, like if you're not in the trade all the way from around 23 cents, 32 cents, all the way down there, then you might want to keep your risk a little bit more tight. And again, you want to protect your capital before wanting to like get gains, right? So if you're entering over here, then you may want to exit if we even lose the dollar region, right? However, if you're already in the trade from way, way down, you could give it some leeway and wait for the 95-cent region.
Okay, that's good. Now, the other structure that you brought up was a potential ascending triangle if price does end up getting picked up here, correct?
Yeah.
And now I've marked that out, guys, with this diagonal. Okay, the diagonal is right here. And if I have to just mark out, I'm going to thicken this line right here just so you guys can see it. This is the ascending triangle, okay, that Sean is looking at. So if we start if we start maintaining these higher lows, this could very well draw in an ascending triangle, okay, which could also break to the upside. Now, of course, all of this has measured moves. The M-like formation would take, if this actually does see fall through to the downside, it would take Cardano all the way down to 52 cents. If the ascending triangle plays out, which on a technical standpoint is a bullish pattern, okay, that would take Cardano all the way up to, guess where, Sean?
$2, I'm guessing.
No, actually, $1.69. Yeah. So that also lines up with the weekly targets that we have. So there's some level of confluence there. So yeah, these are the targets for Cardano. Remember, it's going to be an if this then that, but so far, I personally am leaning towards the side of the overarching trend, which is still bullish. Okay, I'm looking at $1.15 as the fact that we held it is telling me that, hey, this still has a good chance of revival here.
Yep. Again, I'm a trend trader. I'll play the trend. The trend is up.
Boom.
Keep it mango, guys.
Yes, sirree. Now, Sean, any final notes to this?
Nope. I think we covered pretty much everything, Kusha.
Beautiful. Now, with this, guys, trade safely, trade stress-free, trade the mango way, trade the easy way. Ciao, guys.
Ciao.